Here we are with another video about the COVID-19 stimulus relief package and how it could be impacting you. So this video, we're going to be focusing on businesses. So whether you're a sole trader, if you're an employer, and specifically focusing on those with a turnover of less than $50 million, which should apply to most of our clients at Hannan's 360. Okay, so let's talk about what we're going to be covering in this video. So we're going to be discussing the coronavirus guarantee scheme, quick and efficient loans for those who are looking to obtain funding, boosting your cash flow, apprentices or trainees for those who employ any apprentices, the immediate write-off, and accelerated depreciation. So some of these things are going to be applicable to sole traders, even if you don't employ people, and for those who do employ people, potentially all of these items could be applicable to you. So let's run through and see what's going to benefit you. Okay, so before we go through the specific items, I do want to highlight the business.gov.au, a fantastic resource. At the time of recording this, it's the 23rd, the wee hours of the morning of the 23rd of March. And the information's only just been released about the government stimulus package. So more information is going to be released in the coming days and weeks. So check out this link. I'm going to post it on the video so that you can look at the information there. I am covering off things in a bit of a sort of high level type basis. And so if you want the further details, visit this link. And this is also where you can go to keep updated with all the changes that they'll be announcing in the coming days and weeks. Okay, so let's talk firstly about the coronavirus guarantee scheme. So what is this exactly? So it's going to be applicable for those who are looking to obtain loans. What the government is looking to do is to guarantee 50% of the value of the new loans that are issued to eligible lenders or small to medium sized businesses. So the aim of the coronavirus guarantee scheme is to enhance lenders' willingness to be able to provide credit to these businesses. As you can imagine, if they're already being impacted by some of these changes, they're probably going to be a bit apprehensive to provide credit. And so hopefully with the government guaranteeing 50%, it will give them the confidence to be able to do that. So again, with the coronavirus guarantee scheme, some of the things that we need to consider is that it's for SMEs, so small to medium businesses or enterprises with a turnover of up to $50 million. They will be the ones who will be eligible to receive these loans. And the government is looking to provide eligible lenders with a guarantee for the loans on the following terms. So the maximum total size of the loan is $250,000 per borrower. And the loan will be for up to 3 years with an initial 6-month repayment holiday. So to me, it sounds a bit scary to think that they're having to repay $250,000 or up to $250,000 over 3 years with a holiday repayment holiday rather. So we really need to be having a look at the repayment amounts and how it's going to impact your business. Whilst it sounds all rosy on the surface, we need to ensure that your business is going to be able to afford the repayments. The loans will form part of an unsecured finance. So what they're potentially going to be looking for is an asset for you to secure against that loan. So something to think about. You might need to have property or other assets to be able to secure against that loan. So what I also want to talk to you about now is something different to the guarantee scheme, is the quick and efficient access to credit for small businesses. So at the moment, the government have, or prior to now, the government have in place responsible lending obligations to the lenders. So it means they can't give loans to anybody, which is obviously best practice. But already, if the small businesses are being affected by COVID-19, their financials probably aren't looking too rosy at the moment. And so the government have looked to remove some of that responsible lending obligations to try and help small businesses obtain finance. So this is going to be applicable for those who are looking at new credit, credit limit increases, and also credit variations and restructures. So I already know a number of clients who recently have looked at obtaining credit, but because of certain criteria that they haven't met, they haven't been able to achieve that. So hopefully with these changes, they might now be successful in obtaining that. As always, have a chat to us, talk to our finance team so that we can assist, talk to our accountants, talk to me about cash flow effects, your affordability. Just because these options are available does not mean that you race out and go get a new loan. We still want to make sure that it's appropriate for you and your business. And we've also looked at the viability of your business as well. Okay, so this is the really big one. This is boosting your cash flow, and there's a potential for some small businesses to receive up to $100,000 in wage subsidy, which is absolutely fantastic. And it's also been opened up now to not-for-profit organisations. So this has changed as part of the second release of the government stimulus package. Previously, the minimum payment was $2,000. That minimum payment is now increased upwards to at least $20,000, which is fantastic. And previously, the upper end of the subsidy was $25,000, and they've increased that to $100,000. So really good stuff. It's really designed to help to continue to support businesses so that they can continue to employ and retain their staff members, and really helping entities to continue to operate. Okay, so let's talk about boosting cash flow eligibility. So and I've just made a notice there's a slight typo there, but that's okay. So with the eligibility, those who will be able to apply or to receive the subsidy, they will have a turnover under $50 million, and they'll be employing workers as well. So the ATO are looking to provide a credit as part of their activity statement from the 28th of April upon the businesses lodging their activity statements. So basically what that means is they're not just going to transfer money into your bank account. What they're going to do is when you lodge your BAS or your installment activity statement, they'll have a look at how much your pay-as-you-go withholding is, and they'll look to credit up to 100% back to you up to $50,000 for those who are eligible. If for whatever reason it results in a refund, then you'll be able to, they'll transfer the funds into your bank account, but it's most likely or more likely that it will just result in reducing your BAS payable, which will of course be super helpful. The other one there is eligible businesses that pay salary and wages will receive a minimum payment of $10,000 even if you're not required to withhold tax. So if you're just paying someone just a very small amount, then potentially you could still receive up to $10,000. So what you'll note is in this so this really relates to that first quarter. So what the government's looking to do is they're looking to release the cash flow booster in 2 installments. The reason for that is a couple of reasons, but one of the reasons is going to be that if businesses aren't active and if they are forced to close within that first quarter, then potentially they will only receive the first wave of the cash flow booster. So something to think about. So if the tax that you're withholding from your employees in that first quarter exceeds $50,000, you'll only get up to $50,000. You won't get an amounts in excess of that. Admittedly, most of our small businesses fall under that $50,000, so most people should be fine. And the other thing to think about as well is this $10,000 payment amount. We've got quite a number of self-employed people who might be paying themselves either a dividend or simply just recognizing drawings and not wages. And so there's an opportunity there or possibility that you would still receive the $10,000. But there are big opportunities for us to make adjustments to your drawings to recognize them as wages instead of drawings or dividends to ensure that you're capitalizing on getting as much of this rebate as much as possible. And we've already looked at some modeling for some of our clients. One of our clients is looking to receive an additional $20,000 by making the necessary adjustments. So really important stuff here. If you're not even quite sure what I'm talking about, but you know that it could potentially result on receiving more of the subsidy or rebate, then have a chat to our team. We're here to help. There is a fee from $330 for us to look to make that adjustment for you or to look at those calculations, but well and truly worth it. Again, it could result in quite a significant increase to the amount that you'll be receiving. So the payments will only be available to active eligible employers established prior to the 12th of March 2020. So this is really important. This is something that they've released more recently, and this is so that people don't all of a sudden turn around and say that they're an employer, and so that they can capitalize on these rebates, they have to already be an established employer prior to the 12th of March. They have provided some exemptions for not-for-profit organizations, as they recognize that some of these organizations will be created as a result of the coronavirus pandemic. But in general, if you haven't already registered as an employer by the 12th of March, then potentially you will not be eligible to be able to capitalize on these subsidies. Okay, so let's talk about the additional payments. So I talked before about them releasing in two different installments. There'll be a first wave and then a second wave. The first wave up to $50,000 and the second wave up to $50,000. So to qualify for the additional payments, again, as I mentioned before, you need to be active. So again, if your business is already closed, then potentially you may not be able to benefit from some of these payments. So there are two different types of payers generally in the way in which you declare your activity statements. So for those who are paying and declaring the wages on a monthly basis, there's different rules and different payment dates, I guess, for you. And then there's those who pay their wages on or pay-as-you-go withholding on a quarterly basis. So there's going to be different dates that are going to be applicable for you. Generally, those who are on a monthly basis, you're going to be receiving those credits quicker and sooner. So there's certainly advantages there. So your additional payments will be delivered as an automatic credit in the activity statement system. This will be equal to a quarter of your total initial boosting cash flow for your employer's payments following the lodgement of your June, July, August, and September activity statements up to a total of $50,000. And then for those who have quarterly activity statements that lodge quarterly, the additional payments will be delivered as an automatic credit in the activity statement account, and it will equal half of your total initial boosting cash flow for employers' payments. So what they're saying, it will be equivalent to half. You'll be getting the $50,000, not the $100,000, but the $50,000. So that's how the additional payments will be distributed. This measure will benefit around 690,000 businesses employing around 7.8 million people and around 30,000 not-for-profit organizations. So that's pretty exciting stuff. Okay, so to qualify for the additional payments, as I mentioned before, your business must be active. And with the payments, I just want to talk about the timing of the payments. So boosting cash flow for employees measure will be applied for a limited number of activity statements, and the ATO will deliver those credits to your account. Where this places the business in a refund, the ATO will look to refund within 14 days. So I don't think this will be applicable for a lot of businesses. They'll mostly just receive that credit and it will result in them paying less towards the BAS. But if it does result in a credit, then you'll actually be able to obtain a refund. Again, these are the timing of the payments. I'm not going to go into too much detail because it might just confuse people with the nitty-gritty, but what I do want to emphasize is that whether you're monthly or quarterly, it will change when the credit will be applied to your account. And so that's the additional payments there. I will talk specifically to each of our business clients to let you know on when you should be looking to receive those payments. One other thing that we need to focus on as well is how do we maximize your payments? That's really important. As I said before, it could be that you're not recognizing wages for yourself as a self-employed person. Currently, you might only be recognizing dividends or drawings. So we really need to work quickly to make sure that we're putting the appropriate adjustments in place to recognize this. There are quite a number of considerations that we need to make in adding you as an employee. Some of those things is already your business has to be recognized as an employer already, as I'd mentioned previously. And if you do pay yourself wages, there will be superannuation that will need to be paid as well. So that will need to be paid despite getting back the pay-as-you-go withholding. So that's definitely something that you need to think about. And the other thing to think about as well is if you're already paying pay-as-you-go installments on your individual installment activity statement, there could be the potential for us to obtain a credit back for those installments and instead declare yourself wages. So there's some maneuvering, some strategizing we can do to ensure that we can, again, maximize your opportunities to capitalize on these subsidies that are being paid. If you are self-employed and not properly recognizing your wages, it's really important that you contact us and allow for us to discuss and go through the calculations. It's best to just email me. I'll put my details down. Flick me through an email. We've got some calculators set up so we can quickly have a look at those adjustments for you. And like I said, for a small fee of only $330 or from $330, depending on your complexity, we'll be more than happy to calculate those adjustments, modify your BAS, and provide you some guidance as to how much you can anticipate those cash flow payments to be. So what I want to do is actually run through an example. So this is provided on that business.gov.au website. And they've provided quite a number of examples, but I've borrowed this one here and I want to go through it because it is a little bit confusing, and hopefully by going through this example, you'll understand the actual application of the boosting cash flow and how it works. So let's talk about Sarah's construction business. So Sarah owns and runs a building business in South Australia and employs 8 construction workers on an average full-time weekly earning who each earn $89,000 per year, thereabouts. In the months of March, April and June, so for that quarter, March, April and June for 2019 to 2020 income year, Sarah reports withholding of $15,000 for her employees and on each business activity statement. So under the government's changes, Sarah will be eligible to receive the boost on lodgement of each of her BAS. Sarah's business receives a credit of $45,000 for the March period, each to 300% of her total withholdings, and a credit of $4,976 for the April period before she reaches the $50,000 cap. So in that quarter, in that March, April, June period, once you hit that $50,000, it just cuts out. You don't get to achieve or receive any more than that. And so no payment for May period as she has now reached the $50,000 cap. An additional payment of $12,500 for the June period, equal to 25% of the total boosting cash flow for employees' payments. An additional payment of $12,500 for the July period, $12,500 for the August period, and a payment of $12,500 for the September period. So she'll receive, under the previously announced boosting cash flow for employers measure, Sarah's business would only have received a maximum payment of $25,000. But under the new enhanced boosting cash flow for employers measure, Sarah will receive a total of $100,000. So this is an additional $75,000 that she would have otherwise received based on the old rules and maximums. Now she's looking to receive a total of $100,000. But you can see there from the way in which it has been paid is that March, April, and May period, she would receive up to that $50,000. And then looking at the June, July, August, September, it is then paid out over that period. And so it's depending on whether or not you're monthly or quarterly as to how that will be distributed. Again, it's probably best for us to specifically look at your own circumstances and calculate those numbers for you, but at least hopefully that will give you some guidance to how it will apply. Okay, so let's talk about apprentices and trainees. So for anyone who has an apprentice or a trainee, there is the potential that you might be eligible to receive up to 50% of the apprentices or trainees' wage during the 9-month period between the 1st of January and the 31st of December for those who are applicable. And it's where a small business is not able to retain apprentice, the subsidy will be available to a new employer. So basically, if you've got an apprentice right now, or somebody else has an apprentice who's had to let them go, and then you look to take them on, then you will still be able to receive potentially that subsidy, even if they weren't already an employee when these announcements had been made. So basically what you'll be able to do is receive up to $21,000 per eligible apprentice and trainee. So that's per apprentice. So if you've got 2 apprentices or trainees, there's the potential that you'll receive $42,000 in total, so for each apprentice, and it's going to be $7,000 per quarter. So it's not going to be paid out in a lump sum, it's going to be paid per quarter, and you'll need to register online as well. So that information is still to be released, the exact details of how that happens, but from mid-April you'll be able to register, and you'll need to claim that before the end of December. Okay, so let's talk about the immediate write-off. So the instant asset write-off, or they're calling IAWO, I think that's a bit of a tongue twister, but effectively what that means is that immediate write-off that used to be $30,000 has increased to $150,000, which is really good news. But on the downside will be that it will revert back to $1,000 for small businesses after the 1st of July. So that $30,000 tax break, or the asset purchase amount, is going to be significantly reduced. So it's really looking to encourage people who are looking to buy assets or want to capitalize on their immediate write-off, really encouraging them to do it before the 30th of June to capitalize on those tax savings there. If this is you, if you think that's applicable, have a chat to us and we can crunch the numbers. We can talk about your cash flow, we can talk about finance, and all those things, and whether or not it's suitable for your business to be looking at investing into an asset of that size with all the uncertainty that's currently happening. Again, flick us through an email and we can specifically address it and ensure that we're addressing the needs of your business. Okay, so let's talk about timing. So again, this proposal applies from the 12th of March until the 30th of June. So if you did buy an asset before the 12th of March, unfortunately, you will not be able to apply the immediate write-off of up to $150,000. And the other thing to note is that it is for new and secondhand assets first used or installed, ready for use in that time frame. And note that how these changes do not take effect until the new laws are passed. So we're still waiting for those laws to be passed through Parliament, and that should be sometime in the coming weeks, so between the 23rd and 26th. So if they are successful in passing those laws, they will apply, but we're still waiting for that to happen. And again, the eligibility of the turnover needs to be less than 500 million. So previously it was less than 50 million. It's now increased to 500 million. Okay, so the next one that I want to talk about is the accelerated depreciation. So if you're a sole trader and you're feeling like you've missed out on some of these benefits because you don't employ, then this is potentially something that you can look at. So if you've already got an existing asset that you had purchased, there's an opportunity for you to be able to claim up to 50% deduction on the cost of the eligible asset. So what that basically means, if you're already depreciating that asset, you might be depreciating at a low rate, could be 15%, could be 30%. Well, the ATO is allowing you to increase that depreciation rate and claim more of a tax deduction. So the turnover needs to be less than $500 million and it needs to be a eligible asset. So it's new assets that can be depreciated under Division 40. and it needs to be installed by the 30th of June 2021. So this is really something potentially, this is when we start citing references from the Division 40 and the Income Tax Assessment Act. It's probably best if we just simply have a conversation and we can specifically address your own needs and the criteria within your business, and see whether or not you're personally able to benefit from the accelerated depreciation. So with regards to the timing, again, I just want to highlight it applies to legible assets acquired from the 12th of March all the way to the 30th of June 2021. Okay, that's it for us now, guys. So we specifically discuss potential things that businesses like yourself can be capitalizing on. The really big one that I want to discuss is that cash booster, just because there are opportunities for us to make adjustments to how you're recognizing your drawings and to make sure that we're recognizing it as wages to ensure that we boost that amount for you. So if you think that's going to be applicable, please contact us. Please don't delay. Ensure that you're contacting us as soon as possible. As you can imagine, we have hundreds of clients, and so the sooner you get in, the sooner we're going to be able to start addressing your questions. And otherwise, it's some exciting news, some fantastic things given these challenging times. There's so much uncertainty, and it's nice to know that there's relief that's going to be available to us wonderful small businesses. So if you, any questions at all, guys, don't forget to email me. Otherwise, take care, look after yourselves, and I'll talk to you very soon.